Bitcoin is in free fall. Is this the end? You'll find all of this and more here at Bitcoin Now. And before we start, I'm not giving any investment advice. This is just speculation and discussion about the crypto market and nothing more than that. And just to make one thing clear, many YouTubers are making a fuss and saying that the Bitcoin bull market is over. However, I believe that we're actually just at the beginning of the game, and from my point of view, the market is going to rise even more. In this video, I'll share some ideas that make me believe in this. Bitcoin, throughout its history, has always been described as a revolutionary asset. Its value proposition is based on decentralization, scarcity, and resistance to censorship. Now, more than a decade after its launch, it finds itself at a pivotal moment that could shape the future of the global economy. An unprecedented supply shock. According to data from Cryptoquant, the selling-side liquidity in the Bitcoin market has dropped to the lowest levels in over 4 years. Meanwhile, demand for BTC continues to grow rapidly, driven by a combination of economic, technological, and social factors. This combination of low supply and high demand not only strengthens Bitcoin's fundamentals but also shows how it is consolidating as an alternative to the traditional financial system. The supply shock concept. Why it's important. A supply shock is a phenomenon that occurs when the amount of an asset available in the market decreases drastically, while the demand for it remains constant or grows. In Bitcoin's case, the supply shock is amplified by its deflationary nature. Unlike fiat currencies, which can be printed in unlimited quantities, Bitcoin is limited to 21 million units, of which about 19.5 million have already been mined. However, the current shock is not just a matter of technical limits. It reflects significant changes in market participants' behavior. According to Cryptoquant's report, the total stock of Bitcoin available for sale has dropped to 3.397 million BTC, a decrease of 678,000 BTC just in 2024. This drop is even more significant when analyzed through the liquidity inventory ratio metric, which plummeted from 41 months in October to just 6.6 months currently. These numbers reveal that liquidity in the Bitcoin market is being drained, as investors choose to accumulate and hold their coins, rather than selling them. The accumulators. A growing phenomenon. The so-called accumulator addresses have played a central role in the market's transformation. These long-term investors, often referred to as hodlers, are adding about 495,000 BTC per month to their wallets, according to Cryptoquant. This behavior reflects growing confidence in Bitcoin as a store of value. But why are these investors accumulating so much? 1. Protection against inflation. In an economic environment where inflation is high in various global economies, Bitcoin is seen as a deflationary asset that can preserve purchasing power over time. 2. Portfolio diversification. Institutional and retail investors are seeking alternative assets that are not correlated with traditional markets. 3. Institutional adoption. Major companies like Tesla, MicroStrategy, and Square have significantly increased their BTC holdings, further legitimizing the asset. 4. Geopolitical context. In countries facing economic crises, such as Argentina, Venezuela, and Turkey, Bitcoin is becoming a reliable alternative to local currencies. Rising demand. Factors driving the market. On the other side of the equation, demand for Bitcoin is growing rapidly. Since late September, Cryptoquant reports a demand increase of 228,000 BTC per month. This growth is driven by several factors. 1. Increased popularity of stablecoins. Stablecoins like USDT, USDC, and DAI play an important role in the crypto ecosystem, allowing investors to store value in digital assets while minimizing exposure to volatility. The market capitalization of stablecoins surpassed $200 billion, a 20% increase since October. This growth indicates a constant flow of capital into the cryptocurrency sector, often used to buy Bitcoin. 2. Global expansion of crypto infrastructure. With more exchanges, apps, and digital wallets available, Bitcoin is becoming increasingly accessible. Its integration into traditional financial platforms like PayPal and Cash App has also helped expand its reach. 3. Store of value narrative. Bitcoin is increasingly being compared to gold, with many analysts arguing that it is a superior digital version. Its portability, divisibility, and transparency make it better suited to the needs of the digital economy. Before we continue, I need to pay my bills, so I'll publish a quick ad. Have you ever seen a watch that's much more than a timekeeper? Discover the Nixie Tube Clock, a perfect fusion of the past and future. Made with vintage technology from the 1970s, each Nixie tube displays numbers in a mesmerizing light show with retro design. It's more than just a clock. It's art, a conversation starter, and a piece of history. If you love exclusivity, this clock is for you. A rare item, designed for those who want to stand out and transform any space into something truly unique. It's the perfect gift for tech enthusiasts, interior design lovers, or anyone deserving something unforgettable. But be careful. This clock is a limited edition and will only be available for a short time. Don't miss the chance to bring this unique piece to your home. Transform time into style. Click the link in the description and secure your Nixie tube clock today. Now, back to the video. Price impacts. Breaking records. This combination of high demand and low supply is already impacting prices. Bitcoin hit $105,000 this month, setting a new all-time high. This price increase is more than just a symbolic victory. It reflects the forces of the market in action. Analysts suggest that if these trends continue, the price of Bitcoin could rise even more, potentially reaching levels that once seemed unattainable. However, it's important to remember that the cryptocurrency market is highly volatile, and temporary corrections are always possible. As the market adjusts to these new dynamics, governments are also starting to pay attention. In the United States, for example, discussions are ongoing about creating a strategic Bitcoin reserve, similar to gold and oil reserves. This shift would mark formal recognition of BTC as a strategic asset. Additionally, growing regulation in the crypto sector could have significant impacts. While many investors fear excessive state control, others argue that clear regulations could attract more institutional investors and increase market legitimacy, especially from the perspective of those who are not interested in crypto markets or who don't buy Bitcoin based on financial freedom or viable financial alternatives. Bitcoin is much more than a digital asset. It's a symbol of economic freedom. It represents a decentralized financial system, where rules are set by the consensus of participants, not by coercion from governments or central banks. The current supply shock is a demonstration of how free markets can work efficiently. When scarcity is combined with high demand, the price rises, encouraging new participants and strengthening the system as a whole. If you're enjoying the video and want to support the channel, subscribe, so you never miss a video and always stay updated on crypto news. And for those who have already subscribed, let's continue. A future based on freedom. The Bitcoin supply shock is not just an economic event. It's a milestone in the fight for a fairer and more transparent financial system. It shows the power of decentralization and the impact of individual choices in a truly free market. As Bitcoin continues to challenge traditional financial norms, it strengthens the belief that a future based on freedom and voluntarism is not only possible, it's inevitable. So despite the slight correction, I believe Bitcoin won't suffer a correction right now, and we are still in a bull cycle. So what caused this market movement? It was this news that caused the buzz. Fed reaffirms ban on Bitcoin reserves while Trump administration plans national adoption. Federal Reserve Chairman Jerome Powell reaffirmed that the U.S. central bank cannot hold Bitcoin in its reserves by law. During a press conference, Powell clarified that the Federal Reserve Act limits the assets the central bank can hold to government securities and other safe assets. He also stated that the Fed does not seek legal changes to allow cryptocurrency holdings, reiterating its historical view that Bitcoin is a speculative, volatile asset unsuitable as a store of value. Powell highlighted the difference between cryptocurrencies like Bitcoin and central bank-issued digital currencies, CBDCs, which he claims offer greater stability and control. This position reflects the Fed's conservative approach to cryptocurrencies, despite rapid changes in crypto policy in the U.S. On the other hand, the administration of President-elect Donald Trump announced plans to create a national Bitcoin reserve, as part of a strategy to position the U.S. as a global leader in cryptocurrency technology. The proposal would include using Bitcoins confiscated in criminal cases as the basis for the reserve. The appointment of David Sachs as head of national strategy for AI and cryptocurrencies reinforces the future administration's commitment to integrating digital assets into the U.S. economy. The news boosted the price of Bitcoin, which surpassed $100,000, reflecting market optimism regarding potential favorable regulations and increased institutional adoption under the new government. This divergence between the Fed's conservative approach and the bold vision of the Trump administration highlights the U.S.'s strategic dilemma in balancing financial stability with technological innovation in the cryptocurrency space. And everyone is nervous because it suggests that the Bitcoin reserve plan has gone up in smoke. And regarding this news, don't worry, because it's not the Fed's job to create a gold reserve. That's the U.S. Treasury's role. So Trump's plans for a Bitcoin reserve are still on track. Nothing has changed in the short term. Now, this statement was quite strange, as it seemingly forced the market down. Who would want to take advantage of this dip to load up on Bitcoin? I guess we'll never know. And to help you better understand the current market, I'm leaving this video here for you. Click and trust.